Hey traders, Keel here, and welcome back to another weekend edition of the Trading Edge. We're going to start things this week on the dollar yen, and this is going to be a follow-up really on the idea that I shared with you last week. And if you guys are new, this is kind of how it works. This is a weekend video that I do, and last week I did a massive one looking at about 14 currency pairs. I don't have the time to do that long of a one this week, so it's going to be a little bit shortened, but whether you're watching on YouTube just weekly or whether you're a trial member or a premium member and you're watching the daily Trading Edges videos that we do during the week, you're going to notice that the ideas just don't come out of left field. They tend to build on each other. So you really want to make the habit of staying in the mix, because you'll start to notice past analysis, or I guess you'll start to notice how past analysis will either change or affect the present analysis. So last week when we looked at this, we talked about an ascending triangle that we had a nice trade call on in the live room. You can see kind of the outline of that right here with these blue lines. And what we've gotten now is a retest into those ascending triangle lows. You can see this area right here where we have some selling pressure beaten back by some buying pressure. That's a nice level to look at for a level of support, and a level that we may see a potential reversal at in the market. Now, the yen pairs are a little bit tricky this week, dollar pairs as well, mainly because of the fundamentals that have been going on, right? If you've been paying attention to the news, or if you've been paying attention to my the daily trading journal that I've been doing over on Medium, because I've been expressing my views on this news a lot over there as it's affected my trading personally, we've seen a lot of yen strength in the market, and that yen strength is basically due to dollar weakness. Recently, President Trump has canceled a summit, or canceled himself going to a summit in Singapore to talk with the North Korean leader. And that has stirred up the market a little bit, where we've seen a flood go from the safe haven pair, which is the dollar, to the safe haven pair when the dollar is quote unquote in danger, which is the yen. So we've been seeing a lot of massive moves on the yen pairs. I think it was Tuesday, and then he came out again Friday, or Tuesday and Thursday, excuse me, when the news of the potential cancellation took place, and then when the actual cancellation took place. Now, what's interesting is that, well, the summit may be back on. I just took a chance, I got the chance to read an article. I haven't done my full analysis, kind of reading up on the news yet, but I want to read this to you real quick. The White House said on this Saturday its pre-advanced team for the U.S.-North Korea summit will head to Singapore as scheduled, signaling that the high-stakes meeting President Donald Trump abruptly canceled just days ago could be back on track. And if that indeed does happen, I think that's going to be positive for the U.S. dollar. And again, we don't trade based off of fundamentals here, but we have a technical reason that has us looking to be bullish. We have a fundamental reason that could potentially have us looking to be bullish. It's always kind of cool when both sides align like that. So a buying opportunity here at a retest of our ascending triangle. I think a retest of the highs right here will be a very conservative target. And then, of course, up to that 113, 114 level for secondary targets, which is going to end up being the top of the range. That's kind of the bigger prediction. But I would certainly get some money, or at least reduced risk well before that area. The next pair that we're going to take a look at is the loonie, the dollar Canada. And dollar Canada is sitting right at a decision point. And I'll explain what that means in a little bit. But you can see we're sitting right at previous structure high, so a previous level of structure resistance. We can even look left and see the left shoulder of our bigger head and shoulders here came to that level as well. And we're also sitting below a previous level of resistance too. Now, typically when we have two levels of resistance, or two levels of structure in general, I tend to notice that the furthest one tends to be tested, and that comes from personal experience, mostly having stop losses in the wrong place and being skunked out of the market, being stop hunted, for you guys who like to use that term. So this is going to be an interesting scenario to pay attention to for two reasons. And why I call this a decision point is because of how price reacts at this level, it's going to allow us to make a decision on whether we want to be short or whether we want to be long. We actually had a very nice short opportunity intraday here with a I'll show you in a little bit as we go down to the 240, but as we retested the previous structure highs the initial time, right in here, just draw a little line up for you, right in here with a nice little short. And then we rallied up to this next level of previous structure resistance. Now, I do think this is a nice level to look for a shorting opportunity, especially if we can get a signal that proves the market will hold that level. And as I mentioned in the previous trade, I don't think this is one where you want to be too aggressive and shoot for a full retracement back down. One of the mistakes I see that a lot of newer traders make isn't necessarily finding the trading opportunity or even entering the trade. It's just misjudgment on either stops and targets. Either stops are too close, not giving the market enough time to breathe, or targets are too far, maybe shooting for something that is a little bit past what the market is willing to give you. So I think approaching this like a counter trend type of trade would be appropriate, mainly because we just don't really have a true trend. You look at the trend here, it's kind of really hard to definitively say we are bullish, we are bearish. We're in consolidation, and I know me personally, whenever we are in such a whenever we have such movement in the market, I like to be conservative. I like to get in, get out, hopefully make some pips on the way, and try to keep my risk short too. Now, if we do end up violating this level, so if we do get a break above, close above, which would give us a violation of previous structure resistance, that then opens up the opportunity to a move higher up to that bigger level of resistance that we talked about near the $1.31 level. So what that means is intraday, there's going to be room, right, for us to operate, smooth operator, right? Room for us to operate between $1.30 and $1.31 for some lower time frame trending trading opportunities. Next up is going to be the Aussie dollar. And in last week's video, we were continuing our analysis on the head and shoulders pattern that was setting up. Just a reminder, we had a nice shorting opportunity up here. We had a nice buying opportunity right there. And then I ended up trading the break here for a head and shoulders pattern. I'll just draw this out again, but as always, you can go back to last week's video and just check it out as well. But we did get the break, right? So we did get the confirmation of a head and shoulders pattern. Unfortunately, we just didn't rally enough for me to make profits. Now, I had very aggressive stops on this trade because of my my entry reason. I took a very aggressive entry approach, so I followed it up with very aggressive stop losses. And although we got an initial rally in my direction, the market came down and stopped me out for only about 8 pips. So again, that's the key in trading. You guys know my history. I'm not a very, very high win percentage trader. I typically range around 55%. The key is, right, when I do lose, and I lose quite often, I try to keep my losses small. When I do win, I try to make sure my wins are a lot bigger than what my losses are. And that's how I've been able to remain consistently profitable over all these years. But what we have now setting up here on the Aussie dollar is a potential advanced pattern formation. If we take a look at this leg right here, starting at 74.89, this is what's going to be called an impulse leg, right? It's a clear swing low to swing high that violates previous structure looking left, and that's going to be the start of our advanced pattern formation. So we're going to label that our X to A. This first retracement is going to be our B, right? Our A to B leg. And you can see I have my Enigma pattern recognition software up. It's going to tell us right now at this point, we could have either a Gartley or a potential cipher formation. Our next extension up, which isn't able to violate our highs, at least not yet, is going to be our B to C move, right? And you can see once we have this this swing point right here, it eliminates the cipher, and all we can look for is a Gartley. And if price action were to come back down to this 74.99, so this is called the 75-cent level, which is a nice psychological number. You can see a nice little shelf right here as well. That's going to give us a bullish Gartley completion. So what's interesting about this advanced pattern formation is that it also lines up with our underlying trend, right? Typically with advanced pattern formations and how they're formed, we usually see them in periods of consolidation, and not only because of the different ebbs and flows of the retracements and the specific Fibonacci that need to be hit in order to fulfill the pattern guidelines, but also a step deeper, just the psychological reasoning behind why the market makes this moves as far as your quote unquote smart money buying and selling and trying to sneak themselves into a distribution or an accumulation type of phase in the market. But what's interesting about this one is that it does come in a bullish move, right? We have that bullish move here. We've been putting in a series of higher highs and higher lows, and we can look at this as being a complex pullback, which essentially is a kind of a double-legged pullback. However, the remaining trend is still intact. So for someone that's a pattern trader that wants to take extended targets, this would certainly be a scenario, right? Keep in mind, we still have that retest of the head and shoulders from last week's video. This would be a perfect scenario where, if you're allowed to, and I say if because if it's not in your rules, don't do it. Don't get fancy. You'll just leave money on the table, and that's gonna mess up your trading down the road because you're not consistently doing something. But if you're allowed to involve yourself in a situation where you can take extended targets, I certainly think this is the one where it is worth taking a shot. So speaking of that Enigma pattern recognition software, if you guys want to give it a try, all you have to do is sign up for our 14-day trial membership. Just go to the homepage, tier1trading.com, click start a 14-day trial, and that's one of the things you get access to with that trial membership. So you get to try it out for free, or $1, I guess, for a few weeks, and see if it's something that assists you in your trading or not. Next, let's head over to the pound Aussie. Now, if we take a look at our price chart, we'll see that the pound Aussie just came to a previous level of structure, right? If we go back to the basics of just reading a price chart, I always like to do this no matter how many years I'm in the market, just drawing out the lines, ebbs and flows, new structure high, outside return, new structure high. You can see a little bit of consolidation here. We can look at this as being one big outside return, followed by our new structure high right here. You can see that the pound Aussie has come back down to previous structure support here on the daily. Now, if we go down to a 4-hour chart, we're going to get another signal as well, which could give us a clue about a potential reversal. And this signal is going to be what's called a falling wedge. And this is what I call an exhaustion pattern. So essentially, you can see here that as the market initially travels down, just reloading my data a little bit. As the market initially travels down, we have a pretty steep slope here, meaning the market makes a sharp move. However, after that, we still travel down, but we kind of start to ebb and flow a lot more than before, causing me to see a slowing in momentum. And, you know, as the momentum slows, it's not surprising that we see a little bit of a relief off of that level. So we have a falling channel, or falling wedge, excuse me, right down here into a previous level of structure support. Another opportunity where I'll be looking for a counter trend trading long opportunity. And this is actually a pair we talked about in, was it Tuesday's Trading Edge videos for you guys that saw that one. And I did get an email from a client asking, why would you consider this a counter trend trading opportunity? And I responded to him and made sense, like, you know, that works. But you know what I'm going to do? We are having our Q&A on Monday, despite it being Memorial Day, because I'm a trading nerd and I've got nothing better to do than be in front of the charts. But we're going to discuss why this is a counter trend trading situation, in my opinion, or why I would approach it rather like a counter trend trading situation, in my opinion, versus a full-blown trend continuation signal. Because if you look at the higher time frames, we are in an established bullish trend and we never saw any reason for violation. So perfect. That gives me a topic for Monday. All right, so the last pair I want to talk about is going to be the Canada yen, and this is going to be very similar to the dollar yen. And well, I'm not going to get on a rant about correlations. I have very strong opinions about them, but if you are looking for correlations in the market or pairs that move in a similar fashion, you'll notice that the most of a lot of the yen pairs, especially the minor ones such as Canada yen, New Zealand yen, Aussie yen, they tend to have the same type of movement. And if you go back to the beginning of this video, we looked at the dollar yen, and this is essentially the same type of formation, right? Price action came up. We put in a consolidative breakout pattern here. We broke out to the upside, and then we got some news that came out. We saw yen strength, and we're back down at the bottom level of previous structure support. So just like in the dollar yen, I think this is a good opportunity to start looking for buying opportunities going into the week, and see if you can find that reason for entry, and of course, whatever you need to trigger your trade. All right, so before I let you guys go for the week, I want you to do one thing. If you haven't done it already, make sure you watch this video called Forex and Crypto Scams, right? Go over to my trading partner, Jason Graystone's YouTube page and watch this video. It is a video where Jason interviews a trader, and well, words can't really give it justice, but let's just say it shows you the harsh reality of what trading actually looks like, or what people think trading actually looks like. And the traders I spoke to that watched this video, they found it hard to believe. They thought that this had to be out of the norm, but trust me, it's not, right? Most of you guys that have been supporters of us over the year, you know what type of message we preach about the markets, right? You can have all the glory, you can have the yachts and the fancy cars and the watches, right? That can all be a great result. It's just going to take a massive amount of time and a massive amount of hard work to achieve. But at least you kind of have the right idea on what it takes. This is what I would say the other 90% of traders out there believe, that it's a get-rich-quick scheme, that it's very easy. All you have to do is these 3 simple steps and fortune will be yours. And I think it's going to be an eye-opener for many of you. So watch that video here on Jason Graystone's YouTube page. If you're a subscriber to the podcast, I copied it. I stole it, right? I asked and then I stole it and posted a podcast episode about it as well. And I think it's going to give you a different perspective of what the reality of trading looks like. And it's really going to, give more importance to why we tell you guys, hey, please share these videos, right? Please tag another trader in these videos and spread the word. We have to break this mindset. It's not just promo for ourselves, but it's trying to save traders' lives out there. Try to save people like this from blowing their account and blowing their pensions and quit and just watch the video. Anyway, I'll see you guys next time. Until then, plan your trade your plan. Don't forget, if you want to sign up for the 14-day trial, just go over to tier1trading.com. You can sign up over there. And I look forward to seeing you guys in the live room this week. I look forward to seeing you guys in the trading edge. Take care.